Good morning, I'm Amanda Burt and I proudly represent Rain and Horn in Sunbury, and we're here today to address the big elephant in the room, COVID-19, and what effects the pandemic is impacting us financially and emotionally. And to answer those questions, I've got Gary Pretty here. How are you?
Good, thanks Mandy. Yourself?
Good, thank you.
That's good.
In your opinion today, what is the market doing now with COVID-19?
Yeah, it's very interesting, the market at the moment. We're not quite sure what's happening in terms of buyers. I think there's a number of buyers who have probably pulled out of the market, just with the inability to get their finance sorted at the moment, which is probably the challenge. The uncertainty around employment, it's causing some issues at the moment.
Yep. And what are lenders doing now during this pandemic?
Yeah, they're certainly looking at things a lot more closely. There's a lot of challenges with lenders at the moment. They're changing policy pretty much daily. They're asking for more updated information. They're asking how the COVID-19 is impacting employment situations, and to the extent that they're asking for pay slips sort of more frequently than what they have done in the past. So there are some challenges in what lenders are doing at the moment, and they're changing their policies on a daily basis. So there's a lot of changes going on at the moment.
Yeah, it's not good, is it?
It's challenging.
Yes. If a client's suffering hardship now, how do they approach the bank?
Yeah, well, the important thing is to approach the banks early. Don't wait until you've actually gone into arrears. All the banks are really receptive of providing some hardship assistance at the moment. Things to do keep in mind, though, is that you are going to incur interest on top of interest, so your interest will be capitalising on your loan. So even if you can make interest-only payments during that period of time, it's going to stop your loan from capitalising. But if you can't afford to do that, or you can't afford to, you'll either have your loan adjusted at the end of the term, and they'll extend it on for another 6 months. Or they'll seek for you to make up your repayments once you resume your employment again. So, but they are receptive, and they are really looking after their clients, which is a good thing.
Good, that's good. And where do you think the interest rates are at now, currently? Yeah,
well, it's hard to tell whether there's going to be too many more movements. I don't think. I think the last couple of RBA movements, the one that was in cycle, we saw lenders all drop their variable rates by 0.25. But the one that was out of cycle that was announced most recently, the lenders didn't move their variable rates. But what they did is they moved their fixed rates by a long way. So some of their lenders dropped their fixed rates by up to 0.6%. So
wow.
Interest rates are really good at the moment. If you can get your finance, there's some really good deals out there.
Good. And do you think we should be fixing our home loans now?
Yeah, it's a really interesting question. I've had a number of my clients in recent times fix their interest rates, given how low the fixed rates are. You just got to be careful when you enter into a fixed rate that you're not going to expose yourself to potential break costs if you need to get out of the loan early during that fixed rate period. But I have always been a big fan of maybe part fixed and part variable. At the moment, it's pretty hard to ignore fixed rates when they're 0.5, 0.6% below the variable rate. So there's some fantastic fixed rate deals out there at the moment in the very low twos. Yeah,
and do you suggest maybe fixing for a year, 2 years?
Yeah, look, the rates are pretty consistent, whether it's 1 to 3 years. So if you've got some level of job security and you think you're not going to have a major impact, 3 years is probably not an unreasonable period of time. Having said that, though, I've got a couple of clients who have just fixed for 1 year just to get that cheaper interest rate for the next 12 months and then review it at that stage. So
yeah, good. And is it hard to get a loan in this current market?
The banks are just looking in more detail around what your employment situation is. So previously you just had to provide pay slips, and now they're wanting to know what the impact is going to be on your job going forward with COVID-19, what your hours are going to become, are you still going to be employed if you do lose your job or you reduce your hours, how are you going to make your repayments? So they're asking a lot more questions around that. Finance is certainly still there. There's a number of lenders who won't deal with certain industries now. They've come out and said if you're in tourism, travel, hospitality, retail, we just don't want to see an application from you, which makes it a bit difficult. But by and large, the majority of lenders are still receptive to taking applications.
Okay.
But I understand that it's going to be more information required to support them.
Yeah. And what do you suggest buyers and first home buyers with a current pre-approval and steady job should be doing in this market?
Go back and check in with with the lender who did your pre-approval. We're having lenders again change every day, and previously with a pre-approval, if you bought within that 3 month period, you didn't have to provide any more information. But now what we're seeing is lenders are saying, well, before we actually move to a formal approval, we want to see your most recent payslip, and that may be a week ago, to show that you're still employed, that you're still on the wages you were suggesting. So If you've got a pre-approval, I wouldn't be just relying on that. I'd be going back to your bank or to your broker and asking for it to be reviewed before you actually commit to the purchase.
Yeah, and what happens with current settlements as well, that you've already got your formal approval?
Yeah, some lenders are asking for updated pay slips before they allow settlement to go through. That's not widespread yet, but it's being introduced. We're seeing more and more that's coming in. The lenders are asking for that information to be provided. So if you do have your formal approval and you do have a settlement coming up, again, it's probably worth just touching base with your lender to see whether they need any additional requirements. But we are hearing of lenders who are actually pulling out of settlements if the clients can't provide updated pay slips. So there's certainly some challenging times on that front coming, I think.
Definitely.
We're expecting, as a group, we're expecting some settlements to fall over.
Yep. Wow. And what happens there with the fees?
Well, it's a very interesting case as to who's going to be responsible for it. Whether lenders are going to take any responsibility for it. It's really unknown. As I said, there's not a lot of lenders who will come out and ask for that additional information yet. Yeah. But the pattern is there, and every day the lenders are coming back and asking for more and more stuff. So I think more and more we'll see more lenders asking for more information before allowing settlement to go through.
Yeah, great. And what's the current turnaround for a loan approval now with COVID-19?
Yeah, it depends on the lender. We've got some lenders who are turning around in 4 or 5 days, and we've got other lenders who are taking 15, 20, 30 days before they're picking up an application. So I think you've just got to pick your mark in terms of which lender you want to deal with and the urgency around what you need to do. Some lenders are just not in the market for purchases at the moment if you're settling within probably 30, 45 days. We have lenders who have got issues even preparing loan documents in less than 30 days at the moment, given their back office processes. So you just got to understand that if you do have a settlement that's sort of within 30 to 60 days, you'll probably be ruling out some lenders you want to deal with. Yeah.
Are you suggesting maybe a 90-day settlement for some?
Yeah, I think you just got to pick the lender. There's just certain lenders you know that if you have a settlement within 60 days, you just can't deal with them. So it's more a case of making sure you deal with a lender who can deliver. And at this stage, that's a changing situation as well. Lender turnaround times are blowing out. Every day.
So hard times.
Yeah, there are certainly some challenges. I mean, they're all saying they're still open for business, and genuinely they are. But whether they can actually deliver on what they need to do is the challenge at the moment.
And how many people are you finding applying for finance at this time?
There's certainly been a drop-off in people applying for finance. Certainly pre-approvals are almost non-existent at the moment for the reasons I've talked about before. A fair bit of refinancing opportunities at the moment where clients may have not reviewed their rates for a while and are seeing attractive fixed rates on offer with other banks. And there are some banks offering refinance rebates to refinance your loans across to them as well. So from my point of view, the most of my applications are in the refinance space. There's a few purchase applications, but again, they're sort of no certainties that they're going to go ahead. So certainly seen a drop off on the purchase front for sure. Yeah,
and do you reckon first time buyers have dropped off as well?
Yeah, definitely.
They're a bit scared?
Definitely, the market. I mean, clients are jittery because they just the tenure of their employment is just so unknown at the moment. So unless you're in an industry where you're pretty much immune from what's going on, essential services or something like that, then you've got confidence that you can get a finance application done. But if you're in an industry that is exposed to what's going on, which is a majority of people, people are hesitant to make commitments at the moment.
Okay, and from your experience and good demand of applications, do you think the market will stay steady?
I think we're still in an environment where we just are unsure what the banks are doing. They're changing their policies on a daily basis. So I think we'll probably see the market drop off. Certainly as a Smartline group, we're expecting to see the number of applications that we do probably ease up a bit, certainly around that purchase space. And we're expecting that predominantly it'll be refinance opportunities for us for the next term. But then you hear on the news that they're looking at releasing some of the restrictions in the short term and that sort of stuff. So that again may provide opportunity with people getting back to work and give them a bit of confidence that they can fulfil the contracts when they sign them. So it's sort of a wait and see market at the moment for everything, to be sure. Yeah,
there's still buyers out there that are buying and people are selling. We've listed a few this week as well. and I'm finding a lot of people that have already sold their home are looking to buy still, and people that have pre-approval are still there looking.
Yeah, look, there's certainly people looking, and there are people who are in industries and employment that are largely unaffected to some extent for what's going on. So they'll always find a home for their finance.
Yeah.
But with the changing market and changing appetite of lenders, it's always good just to go back and recheck on any pre-approvals you might have or applications you've got underway. So. Yeah.
Well, thanks for today.
Pleasure.
No worries. And if you've got any questions, feel free to contact myself on 0431204265 or even Gary on 0459 313 474. And thanks for watching.